Before we get started, as usual, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, all right, so firstly, let me just say apologies for last week, a bit of confusion. There was a public holiday in Sydney, so we missed our market analysis session last Monday, and of course on Thursday I was traveling, so I pre-recorded a session for you and I sent that link out to you. Okay, if anybody didn't get it or for whatever reason, just send me an email and I'll make sure that you can receive that. Okay, all right, so what's happened in the week? Let's have a look at the fundamentals before and the data that's due out this week before we get into our technicals. First thing to say, last week the market regarding the major player or the major moving factor moving incident that happened last week was the FOMC meetings, in which pretty much they said that there will be a delay in the interest rate decision. That also coupled up with poor manufacturing figures and trade balance figures from the US pretty much meant that the US dollar, okay, so the greenback lost ground against pretty much everything other than the yen. All right, now the yen did its own thing as well, but the US dollar pretty much lost ground against most things. And we'll have a look at that, and it's presented a couple of trading opportunities for us that we're going to try and take advantage of today. But that's basically what happened. Now, this week is an actual very, very critical week for if you anybody trading in a pair that is against the US dollar, and that being mainly because we're due out retail sales from the US, and we're also due out the unemployment growth. So the retail sales is this one over here, which happens on Wednesday. Okay, and the unemployment numbers growth happens over here. All right, now what does this mean? This will either cause the reversal of the US dollar weakness, or it will continue the slide along the path that it's going. So this, in a week where the US dollar has lost a lot of ground against the majors, and pretty much everybody's looking for the next bit of data to come out and show some strength, which they're looking for the retail sales and also the unemployment number. In essence, they become very, very important, and they could see the US dollar weaken further or cause a bit of a turnaround in the market. So that's going to be pretty important. Other important things that are happening, if we have a look at the GBP is in an interesting situation. Mr. Carney from Central Bank, the Bank of England, pretty much has said that the wages pressure is increasing, which implies that they feel that they need to raise their interest rates. Of course, I don't think anybody thinks that England will raise their rates before the US, but nevertheless, it's starting to come out more often. On the contrary, though, on the other hand, all the data that the economic data that has come out of England has been quite poor. So it leaves us in a bit of a tricky situation where we have, do we listen to your central banks? So you've got your central banks, what they're saying versus data. Okay, and this is always an interesting scenario. At the moment, the GBP, particularly against the US, has been swinging quite heavily. All right, and when I look at the charts, we're probably about halfway through a swing right now. So this is going to be an important week for GBP, and particularly we have CPI figures. Okay, and that's tomorrow, and the claimant count, which is the unemployment number for England. All right, so that's what's happening on GBP front. The other major currency that I like to look at fundamentally is the Aussie dollar. Aussie dollar's had a really strong resurgence. It's pulled back significantly some of the losses that it had made, and it's come on the back of increasing gold price and iron ore. That coupled with the relations and China situation, which has provided the catalyst, and of course the US has had that general weakness in any case, so our Aussie dollar has recovered significantly from the 68s or whatever number we reached, and I'll have a look at that in a moment when I get to the charts. Okay. Um, on the last one, Kiwi Dollar CPI figures are due on Friday. Kiwi Dollar is, particularly when we look at the charts, it's on a significant run in one direction. So could these numbers be the halt of that direction, and could we be ready to see a turnaround? Okay. Please make sure you note these times, all right, for the major pairs that we look at. That's coming up this week. I feel that this particular week, the currency under the microscope, the pair that's going to be the most impacted by data is going to be the Aussie USD. Okay, we do have on the Aussie front, we have the China trade balance number, we have the business confidence number tomorrow as well. We've got all the US things that are happening, and on Thursday we have unemployment rates as well for Aussie dollar. So this particular pair will be the one that's going to be impacted significantly the most than any other pair due to data. Okay, all right, so that's our fundamentals for the week. Let's bring on our charts. Let's see what's happened, what's happening. Do we have any trade opportunities, and what we've done. All right, so let's start off with the Aussie dollar. Okay. All right, I look at this chart, and I don't know if you recall, I think it was about, was it 3 weeks ago that we took this trade that I introduced. Well, it was the first time that I spoke about it. It's based on statistics, and it was a trade. We traded the GBP USD after like 8 consecutive days in one direction. Do you remember that, guys? Who remembers that trade, GBP? Yes, fantastic. We have that situation right now as well. Okay, so I'm going to take the trade. I just got to choose which pair to take it against. All right, because I don't want to take it on every pair against the US dollar, because then I'm really doubling up my trade or tripling up my trade or whatever that figure is. All right, so let's analyze it. I'll talk about it again, and let's see if you like the trade, and we'll make a decision as a group, and we'll see if we can jump on. Okay, all right, this is the Aussie dollar, and can everybody see that this is just one-way traffic? Okay, it's basically from 69.50 to 73.30, which we're sitting at right now. It's one-way traffic. And more importantly, we've got 1, 2, 3, 4, 5, 6, 7, 8 consecutive days in one direction. It is an extremely rare statistical thing. You can look back through tons and tons of data, and it's very rare that you get 8 consecutive days without a pullback day. Okay, and today we're already on the on the green again, or on the blue as my chart shows there. The ninth day is not confirmed as yet, but we've got 8 consecutive days. So what I like to do is, based on pure statistics, there's no other reason for this. Okay, if I can find an additional reason to take this trade, I will. But this is a trade that comes up. I think I take this trade maybe 3 times a year, or four. I don't think more than 4 or 5. All right, because it doesn't come up very, very often. So when I see it, I always have a go at it. All right, so I really like this one. I'm just torn between whether I take it on the Aussie dollar or the Kiwi dollar. So let me just have a quick look at those charts, because I want to place the trade right now. And I just want to give me one moment. Kiwi dollar's got 1, 2, 3, 4, 5, 6, and this is a bit of a doji, so it's 6. But we've got this double top, triple top up here. All right, I'm going to take it on the Aussie. All right, so let me go back. All right, this is what I'm going to do. When you trade a statistical trade like this, it's really not about supports and resistance. It's a probability trade. Okay, it's simply a probability trade. Someone's asking me, Dirk's asking me, is this live? This is a live chart. This is live right now. Okay, so it's not a recording. It's a live class, and I'm looking at a live chart. Um, this particular trade is simply based on probabilities. Like for example, you might, the best way I can describe it is if you flick a coin and you've just had 9 heads in a row, the probability of getting a tail soon, is getting closer and closer. So that's basically what I'm doing. So it's not a trade that I'm going to get stubborn on. I'm not going to hang on to this trade until it turns around because I've put in a stop at 75 or anything like that. So I'm going to take it in right now, and I'm going to go in with, I think I want to go in. Let me just measure some things. Give me one moment. Okay, I want my target to be this area here. So I'm going to be targeting this area here as my target. Let me just measure that from where we are right now. That's about, let's make it 90. Let's make it 95. So my target's going to be 95, and let me see how far that is. That's 100. No, I don't want that. Okay, I'm going to risk 50 pips on the, no, I'm going to risk 60 against 95. Everybody clear on what I'm doing? I'm going to risk 60 pips to potentially make 95. Yep. Does everybody understand what I'm talking about? I've got 3, 4. Okay, good. Thank you. All right. So make sure that your 60 equals the dollar risk that you want to risk. Okay. So what I don't want you to do is change this number. Don't change that to a 40 and don't change it to an 80 either. All right, so if you're going to do it, just what you need to do is you need to size your trade to the risk value that you want to do. All right, 60 is the correct probability on the trade, so adjust your size as you need. If you feel uncomfortable, don't take the trade. All right, so here I go. I'm going to place it. I'm just going to go 0.1, and I'm going in at market right now. 0.1, 73.28, so 73.88, 72.33. I'm in. Okay, just double check that. Did everybody get that? Yep, we got those levels. All right, so it's the first trade that we've taken for the week. Again, the reason for the trade is we have had 8 consecutive up days. And what I'm doing is I'm banking on the probability that I'm going to get a negative day. Okay, and this is the trade that I like. Now remember, if I get to my 1-to-1 level, make sure that you take your relevant action. 1-to-1 is probably about there somewhere, okay, where that distance is equal to that distance there. All right, so just keep that in mind. All right, let's move on. Euro USD. Euro USD has been the hardest chart to look at lately. I've got this beautiful channel, but the price just doesn't come to my channel, so I haven't been able to utilize it. I'm looking for opportunities, like it's just been hasn't gone low enough like I want it. It's really not showing me anything. Give me one sec. Let me have a quick look at a 4-hour chart. Okay. The only thing that I can think of, the only thing, and it's not even that great, all right, but if anybody wants to take this one as a trade, there is an opportunity right now. If I, on my daily chart, if I go from my A point all the way down to my B point and I put a Fibonacci extension, I've hit my 78.6 retracement level. So I'm not willing to just take a trade just because that has happened. However, on my daily chart, if over here I end up with an inside candle, so I've got this big candle already here. If my next candle, this one right now, which is forming there, ends up being an inside candle to the big one, so in other words, if this one does not go higher than that little peak there, all right, it does not go higher and it stays within these boundaries, then I'm willing to trade it down based off a Fibonacci retracement. It's not the greatest of trades, but it is a trade. It's happening close-ish to a round number. So if someone's really wanting to trade the Euro USD, that's what could happen. Okay, it hasn't formed yet. It's not ready. You need to wait another full day to see what this current candle there finishes up looking like. And for anybody who's newer to the class, what we would like it to finish up as, hopefully like this, a red candle like that, and then on the next day, if it breaks that low, you would take the trade down. Okay, so that's as good as I have on the Euro USD. There's nothing really else showing. If I had to rank that trade from 0 to 10, 10 being a trade that I take with my eyes closed and I really, really like, 0 being no way, I don't want to trade it, this one would be about a 6. Okay, just so that I'm trying to picture the trade, how it's looking. So that's all I have on the Euro USD. It's really not looking great. There's a nice channel, but I just haven't been able to utilize it as yet. All right, let me move on. Let's have a look at the GBP USD. Okay, if I just want to get a consensus. Are we in a downtrend? Are we in an uptrend? What do we think from that bit of chart right there? I'm on a daily chart, by the way. Can I get, I just want to get some feedback, stimulate the mind. What do we think? Up or down? Okay. Oh, this is interesting. I've got everybody saying down, except, oh, now two people saying up. Okay. I'm on a daily chart. Remember, I like to use my, oops, wrong color. I like to use my 50 SMA as the yardstick to measure to help me determine the trend. Okay, the price is currently below that, and also the angle of the 50 SMA is in a negative direction. Another thing to look at in trends is my highs are getting lower. So those highs are getting lower, and my lows right now are getting lower as well. All right, so if I was to join them, I could draw lines like this. So if I ask the question again now, does anybody think that we're in an uptrend? Okay. All right. So I would say we're in a downtrend. All right. I can see the argument of someone that might have said up in a smaller time division. Perhaps it looks better. See, this is in a 4 hour. And in a 4 hour chart, it looks like I'm going kind of up. All right. But on this chart that I showed, it's a daily chart, so it's down. So what I'm going to try and do, all right, what I'm going to try and do is I'm going to try and catch our bread and butter, a price action at the peak of the pullback. All right, so to draw it out for you on the side, the bread and butter type trade is, when we're going down and it pulls up and we go down, we're basically trying to catch price action right there to hit the trade down. So I'm going to try, it's going down, pulling up right here somewhere. The first opportunity that I get, now I'm specifically only looking for, I really want an inside candle. I get an inside candle and it happens, the fact that we're getting close to the 50 as well is really, really good. Okay. And if we can get it, then I'm going to take this trade. So this one I like better than that Euro USD trade. Come and if you look at it, I'm not even using any fibs or anything. It just feels like we're in a downtrend. Okay. So let's zoom in a little bit more, and we may get this tomorrow, I think. There, that candle there, all right, is the high. If the current candle, this one, stays inside those boundaries and we get a candle like that, well then tomorrow we're able to place our pending order on the break of the low of that candle. All right. Now, what may happen is this one may go out there, and then that means you've got to wait another day for another candle over there before you can see it as such. All right. So this trade, I like this one. Trading in a trend, the pullback on a trend is a nice trade. Even though this one is like a very accentuated trend because it's got very deep pullbacks. I'm quite deep into the pullback right now, so that makes me comfortable. And you know what? At the end of the day, if I get it wrong, I get it wrong. Who cares? It's just a probability, and that's just part of trading. All right. So I'm happy with that. So what you need to look out for is tomorrow. You need to check your chart and see what that current candle looks like tomorrow. If it's an inside candle, then you're ready to go. All right. If it's not, you're going to have to wait another day. If it's not, depending which way it broke, as long as it broke on the upside, we still got another opportunity for it the following day. Question being asked, wait for the counter trend break at the trend line. Counter trend at the trend line. Let me see if I understand that. Is this what you mean, Sanika? Draw a trend line up there and wait for this to break up that way to trade that way? Is that what you're referring to? Can I draw a trend line over here? No, I don't like that one. The other option is we could use that trend line that I've just drawn there, okay? But what I'm saying is I'm not going to wait for it. If I get the setup that I want out of that, I'm willing to take the trade straight away. All right. And if it turns out that this goes all the way up to there and that happens over there, that's even stronger. Okay. I can't see that one, Sanika. Give me 1 second. I'll put you on hold and let's see if my eyes can see what you're talking about. Sorry, I can't see that, but I just saw something else that actually makes me like this trade a little bit better. Can everybody see that there's another hotspot here? We got a turning point. We got areas here where it bounced up and rejected as well, and we're there again. Can everybody see that that's a hotspot as we covered a couple of weeks back? Okay, so that's a hotspot and we're right there again. So I actually do like if we do get, I'm still not going to trade it unless I get what I'm looking for, all right? But if we get it, you know, then that's what trading's about. Okay, so look for that inside bar tomorrow and hopefully we get a setup to take that as a possible trade. Let me just get rid of this line so I don't confuse myself next week when I look at this chart. All right, let's have a look at the next one, gold. Is anybody long gold right now? Can I just get a show of hands? Anybody long on gold right now? Okay. This is the pattern that we tracked, isn't it, guys? We've been tracking this one. I believe we took this trade. We were on that trade there. This one here, unfortunately, this candle was too big, even though it's an engulfing candle, but it's so big that it gave us not enough room to take it. So that was not a trade. But right now we've got this breaking out candle trade. Does that look like a strong bullish candle to everybody? Let me zoom in a bit better. It's a daily chart. What do we think? What's the consensus in the room? What do we think about this candle here? Have we broken out of the candle, out of the pattern? Okay, good. It's unanimous. Good. All right. So that in theory says that this is a valid trade. All right. Now, gold, remember, is a little bit different to currencies. So you'll have to trade a little bit stronger and harder than a little bit larger size. You can't do 0.01 on gold. So you have to go 0.1. All right. So if you're uncomfortable with that, just walk away from it. Okay. Now, let me see if I want to push myself into this trade. Give me 1 second. Well, it's kind of too bad I have to because otherwise I wouldn't be letting probability do what it does, isn't it? So I'm jumping in right now. Give me 1 sec. Right click, trade in, and I'm in. Okay, let me work out my stops now. Give me 1 second. I've taken the smallest trade. I always take the same size trade for the classes on Monday. All right, the closest you could put your stop is here. That is the closest. And the risk amount on that will be, well, give me a sec, I don't want to get it wrong. It's going to be about $220. So if you can't risk that, don't worry about it. But let me just place my stops. I'll adjust it in 1 second. And let's talk about targets. Now, ideally, the proper target is this distance there. Let me just zoom out for 1 second. I just want to see how this chart. The only thing that I don't like as much about when the pattern comes this direction, I prefer it to break that way, but I will trade it both ways. When it breaks downwards, I like it better. So I'm going to make my target. I'm thinking I've got to go at least 1 to 1. I'm going to go up to about here. So I'm at about 2 to 1 there, I think. And there I go. Any questions on what I've just done? Again, if you've never traded gold, possibly you take it in demo mode or just sit and watch it. All right. Um, Gold trades are larger than your currency trades. So the breakout is very, very good. It's strong. Hopefully lots and lots of people around the world are seeing this, and that's what makes patterns work themselves out. All right, so I always trade this pattern, so I'm not going to stop today. If I get stopped out, I get stopped out. That's part of trading. All right. For anybody who doesn't understand it correctly, obviously you can see the triangle that I've drawn, and this candle is about as bullish as it gets. It's virtually got no wicks down the bottom, and the top wick is very, very tiny. It's also cleared this high, and it's cleared that one as well. Okay, so valid reason to take the trade. The closest that I can put the stop is the last significant low, which is this one here. So that's where I've done it. I could put it here, but that's just way too, that risk is too much for the trade. So I don't want to do that for this one. So I've just put the risk up here. All right. Okay. Let's hope gold is nice to us. Let's move on. US yen. Oh, look at this chart, guys. It's just compressed and compressed and compressed, and it's still, I keep extending this box every week. We're still trading inside that range. That's a 4-hour chart, by the way. If I go to a daily, you can see it as well. See how tight that area is. This basically says one thing, okay? The longer this market stays inside of that range, the greater the breakout is going to be. When it does break out, it's going to break out in a bigger way. So with this one here, we just got to wait, and what we're looking for is the candle that looks like that, or that looks like that, just like we just did in gold. And then at the open of the next candle, you take the trade. Again, this is a very difficult psychological trade to take, because what may happen is you may just watch this come all the way down there up to there, and then you go, oh, this has already moved this amount of distance. I don't feel comfortable about continuing the journey down. All right, so it's a difficult trade to take, this one. If you've never taken a breakout trade before, maybe do it in demo, just watch it. Demo is not something that I like to trade lots of. I prefer to trade in very, very tiny amounts, because psychologically it can do you harm. Nevertheless, it's still an opportunity for you to watch a moving market, and every experience that you get at watching a breakout trade, or whatever type of trade it is, it's a little bit more experience gained. Okay, so right now I can absolutely do nothing on the US yen. It's I'm not even going to touch it. I don't even want to try and push a trade. It's just so compressed that I have to wait until I break out of that. That range, by the way, it's a 270 pip range. Comment, if I put Bollinger Bands, it looks like a squeeze on the Bollinger Bands as well. Yes, it probably does. Let me just do it just for the exercise. You can see the Bollinger Bands are squeezing in. They're getting tighter and tighter. Okay, and usually when the Bollinger Bands start getting tighter and tighter and tighter, we can get the big candle leaving, and that's what we're looking for. Okay, so if you really wanted to try get in a little bit earlier on this trade, what you can do is drop down a time division. So let's go into our 4-hour time. Give me one moment. As tight as I could get in would be somewhere around about here, and possibly there. So, and make this my significant levels. Let me just measure that. What's that? That's at about 1930 and 2050. Let me just draw proper lines on that and get rid of these Bollinger Bands. It doesn't look as good, guy. No, let's not force it. I'm trying to see if I can get you an earlier entry into the break, but I just get the feeling that it might go to the edge and then come back. So leave it as is. That's the proper region. We just got to wait it out. All right. So that's US yen. That's all I have for you there. Basically nothing. We just got to wait again, continue another week to see if we get the breakout. Euro yen. Oh, nice. Anybody take this trade? Is anybody on this trade right now? If I've got these lines on my chart, that means that the last time I sat with you, we looked at this pattern. correct? Okay, Rav's on. Yes, anybody else on? Linda's in as well. Well done, Linda. Okay, good. It's good to see some of you taking some of these trades. This is a really nice pattern. You know, it's a 4 hour pattern, converging triangle. We got a nice break out of that, and it's on its way. So let's see if it holds and then just continues to push up. Let me see. For those of you who do not have a trade on, let's see if I can find something for everybody else. Give me one moment. No, there isn't, guys. That's all I have. However, if you were to trade this off a daily chart, okay, off your daily chart, your entry level would be very, very close to where you are right now. All right. So you could, in theory, enter this trade still. On the 4 hour chart, the trade's a little bit more advanced, but on the daily chart, the entry level is virtually at where I've just drawn that mark. If you're a little bit conservative, you could wait for a little bit of a pullback and then look for your entry into that direction there. Okay, but the euro yen, I'm not in. Okay, and I've already got two trades, so I'm not gonna get on this one. All right, only because I've already got two trades on and I've traded two triangles already. It's slightly correlating market, so I feel that I might be doubling up on my positions with my gold and this one, so I'm going to leave this one alone. All right. So does everybody understand the reasons? So and these are the kind of things that you should have and address in your trading plans. All right, because let's say for example, if you were to trade a strategy such as, I don't know, price action trend. All right. If I look through 50 charts, I could possibly find 10 different trades to trade. Now, I have to address how many trades I'm allowed to have at the same time, how many correlating trades can I have at the same time, because they could be doubling up on each other, and these are part of things that you should uh, have thought about before you go out and take trades. All right, so that's very, very important, and it's an important facet of the trade in itself. So because I'm already in on gold, I'm not going to jump on this one, and they're both converging triangles, and it's a slightly correlating market. All right, so I'm walking away from this one, but it looks like a valid trade. All right, and this one, if you for example don't want to take the gold one, the euro one, you are able to trade at a smaller level than the gold. All right. Okay, let's move and have a look at the Kiwi dollar. Okay, the Kiwi dollar, very similar to the Aussie trade that we're attempting. The only difference is that the Kiwi dollar had this doji in between. So the doji, if you get a different colored candle or a doji in between, you got to start the count again. So when I start the count again, I'm on 1, 2, 3, 4, 5, and 6. All right. Now, having said that, I'm at a point of interest up here. All right. I'm at a level where the market in the past has rejected. All right. Is it going to reject again? We don't know. All right. I don't know the answer. But what I do know is that price action can assist me in the trade. So what I'm going to do is this. The Aussie, I took the trade already and I'm in the market already. But with the Kiwi, if I get an inside candle tomorrow, I will take the trade tomorrow. All right. So what I'm looking for on this particular one is if I end up with an inside candle to that one, then tomorrow I'm happy to trade the break of the inside candle down. All right. I'm not going to jump in at market today simply because I've got one to a third point because I don't know if it's going to bounce again. The Aussie dollar, I took it at market because I've had 8 consecutive days. The Kiwi, I've only had 6 consecutive days. Everybody with me and understand the reason why I'm not trading the Kiwi dollar right now. Now, if somebody out there wants to trade it, by all means, trade it. I do like that we're at this hot spot, so what I'm going to do is I'm going to wait for the current candle to finish and then see what I end up with, and then it'll give me a clearer picture with an easier decision to make. And I'm getting a question asked, what if this candle breaks it and finishes like that? If that happens, that candle there would be what? Candle number 7 in a row. Correct? Does everybody agree? I'm not willing to jump in on candle number 7 to continue the journey for the very same reason that I'm actually trying to trade against the 7 in a row. That's the only reason, Rav. That's the only reason that I would not take that trade if it ends up like that. Okay? Only because I've had 7 in a row. If it was candle 5 or 6 or 4 or whatever, I don't care. Then it would be a valid reason. Let me analyze that situation a bit better though. Is it a true break? Let's have a look. Yes, it would be. Which actually reminds me of something. This area here, I highlighted that last time. Did anybody trade this breaking candle here? Did I have it off a 4? Did I do it off a 4-hour chart, guys, or did I do it off a 1 or off a daily? Because I've boxed this out, so that means I said I'm looking for a breakout. I did it off a 4-hour. Let me change. Thank you, Rav. So on my 4-hour chart, give me one moment. On my 4-hour, let me just extend my chart to when it actually breaks. Ah, on my 4-hour, it's clear, very clear. That's a nice break. Okay, who took that trade? Okay, Rav did. Well done. Oh, I did that with the Aussie as well. Is that what you're saying, Rav? We had a break. Oh, that's right. I remember. We had a breakout zone drawn out on the Aussie dollar and the Kiwi dollar, and both went well. So remember when I told you about breakouts, guys? What did I typically say? I said roughly the height is what you can expect as a reward. Have we reached that height? Pretty close to reaching it, or I think we have actually. And now I'm on a hot spot on a third touch. So if I get that if I get that price action, this is a trade that I will take every single day of the week. Okay, but I just want you to wait for the inside bar. All right, because we're on the Aussie already, and it's only day 6. Okay, that's great. Thanks for reminding me, Rav. I wasn't aware. I forgot about that breakout trade. All right, so Kiwi Dollar. The game plan is wait till the current candle finishes, see if you get an inside candle, and then look for the reversal break. All right. Last one for the week, Euro Aussie. Let's have a look. Euro Aussie's been the one that we've said recently. Let's stay away from it because it's been moving quite a lot. I'm at a really nice spot right now. Does everybody agree that this spot here is something good might happen over here? We've got 1, 2, 3, 4 touches, 5 touches, question mark, or question mark. Am I allowed to trade a breakdown on this one? Yes or no? Okay, I've got 1, 2, 3, 4 yeses. What do we think, guys? Am I allowed to trade the breakdown on that? I've got one that says no. I've got two that say no. I've got one that says up is a better option. I agree with that. Up is a better option. I prefer to trade it up. But that's only because of the psychology. All right. No, no, and no. The answer is yes. I am allowed to trade a breakdown because it's going against the gradient. Remember, it's going in the opposite direction. If the line was there and I break that way, I'm not allowed to trade the break. All right, is that clear for everybody? If I'm breaking in the same direction of the line, I can't. It's not really a breakout. For it to be a breakout, I've got to be trading either. I've got to break a horizontal line or I've got to break a line that goes in the opposite direction of the angle. So this one here, you can. All right, so let's remove all that and let's have a look at what we've got. Let's zoom in. Trade the breakdown after it tests the line on the backs. Okay, so the question being asked is, let's say it breaks down like this and then it comes back up and tests that spot and then trade it down. Yes, you can do that. The only drama with that, as I always say, is sometimes it doesn't come back and you don't get a retest. It just goes down and you miss out on the trade. Okay, but if in your rules it says trade the retest, then that's fine. All right. Okay, so what I'm going to look for, I'm either going to look for the big red candle, all right, or I will look for an inside candle to go back up. How many candles in a row? 1, 2, 3, 4, 5, 6, 7, 8. Ugh. These ones got long wicks though. All right, forget about the 8 days in a row for this one. All right, let's just stick to standard trading. We're looking Our number one choice is I want an inside candle to go back up. That's what I'm looking for. If you get the big breaking candle, make a decision yourself and see if you wanna hit that trade. Everybody clear on the plan for the Euro Aussie? And remember, the Euro Aussie at the moment it's a lot more volatile than the other currencies. All right. Okay, any questions? Anybody type them in while I review what we've done and I summarize our game plan for the week. Aussie dollar. I'm in the market already. I've gone in with a 60-point stop and a 95-point target. I'm in the market and I'm down a little bit. What am I down? I'm down 7 pips. Okay. Aussie dollar. The reason for the trade, I have got 8 consecutive up days and I'm trading a fade. All right. Aussie dollar, we are in. Euro USD. Euro USD at the moment is really awkward to trade. The only thing for those who really, if there is a Euro USD trader that wants to trade, we are sitting, we've touched the 78.6 Fibonacci. If you get an inside candle, at the very least, I'd want you to wait for an inside candle and look for the breakdown of that candle, then you might have a trade there. Okay. It's not a trade that I am participating in. It's not the best of setups. GBP USD. GBP USD, we are at a hot spot in a downtrend and I'm looking for an inside candle tomorrow to see if I can hit that one down. All right, I need to wait till tomorrow to see what the current candle ends up looking like. Gold, I've taken a gold trade. I'm in gold at the moment. And to give you an idea of how gold moves, 100 and if see it moves quite a lot. It's up 8. Let me just give me 1 second. $2.30 is 23, I think. 100, when you read 100 on your MetaTrader, 100 is a dollar, okay? Write that down, someone, so that you know. Give me 1 second. Minus 50. Yes. Okay. 100 is a dollar of US dollars. So if you see the equivalent of 10 pips, it's like 1 US dollar for gold when you trade 0.1, which is the smallest size that you can. All right. I usually have a little chart on the back page of my trading plan of things like gold and oil and index market if I ever trade them. All right, just so that I easily remember. US yen, we're inside a very congested region and we're waiting for a breakout. Euro yen, some of you are already in on this trade. We've broken out on a daily and the trade is long. Some of you may want to wait for a retest, or you just sit on the sidelines and watch it. Kiwi Dollar, we're going to wait for tomorrow. Let's see if we get that inside candle to give us a setup for a short breakdown. And Euro Aussie, we're on this support line. We're waiting for an inside candle to see if we can bounce off it or a big bearish candle to break through and trade short. Someone's asking me, can I have a quick look at the Euro pound? Give me 1 second. The Euro pound is a pair that I haven't looked at for years. Ignore any marks on this chart because they don't belong to this chart, they belong to the other one. Give me one moment. Nothing. Awkward. It's in a really awkward zone. We got to get out of that area before we can try and find a trade. So no, there's nothing there. Okay. Any other questions? Let me change my chart back. Got a couple of minutes. We're all good. Okay, if we're all good, we'll call it a day. Just remember, Aussie US dollar is the hot one for the week. This trade that I'm in, I will get stopped out or I'll hit my target this week. I'm pretty sure of it. There's just too much data coming out, so it'll be a hot one. Keep what I would urge you to do, if for those of you who have been trading for a little while and the ones that are going to the next level, and I've seen some of your trades and things like that, some of you are doing quite well, get into the habit of even looking at your charts as soon as you wake up or as soon as you turn up to the office, and basically have a look at these same charts that I look at on a Monday. You need to check that inside candle tomorrow, because what happens, I find a lot, is that you don't do that, and then by the time you see it, you've missed a trade. All right, so you just got to get into the habit of it, and then it'll become second nature for you. All right, I see that some of you are taking the trades, and I can see the difference in your accounts, and some of you are cherry picking. When you cherry pick, then it's not really trading. You haven't given probability the chance to do what it needs to do. I'll dig something out good for us for Thursday. Take care of yourselves, and I'll see you all on Thursday at 3:30. All right, bye for now.